Welcome to Just Think About It with Nadine and Ben. We're recording this episode on Wednesday, April 2nd, 2025. Before we start our conversation, we have two key requests. First, if you're enjoying our podcast, please subscribe via Apple, Spotify, X, YouTube, or your platform of choice, and make sure to hit the like button. Second, we value any kind notes and feedback and would appreciate you letting your friends know where to find us. Today, we are thrilled to introduce you to Kevin Muir, the founder of the Macro Tourist Financial Newsletter, co-host of the Market Huddle podcast, and veteran trader with over 3 decades of experience in markets. We're excited to have him with us today, given the uncertainty and resulting volatility in the macro markets lately and in the last 5 minutes. So welcome, Kevin.
It is a spicy day to be here. We're recording this Wednesday at 4:30, and it is your Liberation Day. So how you guys feeling? You feeling liberated?
Well,
Liberated from our money.
That's right.
Yeah. So I think that's first and foremost that we want to let you know that we do come in peace since it is Liberation Day. You know, tariffs just got announced, 10% across the board. I guess starting tomorrow as we record here. And you are our first Canadian guest on the show, so it is fitting for us here, Kevin.
I am honored to be your first Canadian guest, and I hope I'm not your last.
No, definitely. and I want to focus a little bit on Canada. So we know that you just closed out your Canadian dollar short. Could you walk us through your trade? Because I think that'll help us give people insight into how you think about things, and then we'll roll from there.
Okay, so I've been short the Canadian dollar for pretty well 2 years.
Wow.
And the reason for my short was that I viewed the Canadian economy as tremendously unbalanced. And it was lacking, and I thought there was, in essence, a real estate bubble that was going to collapse.
Right.
And so when we go and look at the kind of the setup, and the reason I was short was the consumer debt, meaning how much debt the consumer has as a percent of GDP, was way higher than you guys. Like we as Canadians were, I can't remember what the number was. It was 120% of GDP, where you guys are like 70, 80. So we had this huge consumer debt. Then we had this situation where we raised rates actually faster than you at the beginning, which I thought was just absurd, because you guys have that wonderful 30-year mortgage where everyone could lock in their rates, whereas we don't have that. Most of our stuff is like 5 years, and a lot of people just floated the front end. So the reality was we were actually more exposed. So we had a larger consumer debt that was more exposed. We were faster raising rates. And then the other issue was that when we think about why we had done so well in terms of Canada, like, you know, you guys had done well because of your fiscal stimulus. You guys ran one of the most aggressive fiscal stimuluses in the world. You did about 44% of GDP in terms of fiscal deficits from COVID till today. We were much lower. We were 16%. We didn't do as much. And so then you say, well, why was our economy not collapsing? And the reason we weren't collapsing was we had gone and done an incredible immigration policy. We had this huge boom. And what had happened was, after COVID, a lot of people retired. And then all of a sudden we hit this situation where the government looked around and said, holy smokes, labor is actually winning. We're having trouble filling spots. We better bring in people. So we just opened the door on the floodgates in terms of immigration. We had one of the most unbelievable population booms that we've ever had. And it was, you know, we're all immigrants into this, North America. So we they're the lifeblood of our economy. And there's nothing wrong with immigration. In fact, it's very needed and stuff like that. But the trouble is, when you go so fast, there was all sorts of stresses. Like we couldn't, in terms of, they were pushing up the price of housing. They were also requiring resources we don't have. Like we don't have enough hospitals. We don't have enough systems. So we were just bursting at the seam. And so when you looked at our economy, it seemed to be going fine in terms of our GDP growth. But when you did the GDP growth per population, we went from being the number 2 in terms of just outright GDP growth. I can't remember what the number was. Let's say you guys were 4, we were like 3.2 or something like that. And then everyone else was lower during this period. But when you did it per population, we all of a sudden went from being the second in the G7 to the absolute last. Meaning that we weren't really growing, we were actually just bringing in a ton of people that were creating this GDP with these people coming in. So our economy was actually much weaker than it seemed. And this was one of the things that was unusual was when you spoke to Canadians in like 2023 and 2024, you'd ask them how they were feeling and they would all be like, it doesn't feel great. I'm not doing
Right.
that well. And the reason it wasn't, although the numbers looked positive, it was on a macro, like on a whole basis, we were doing better in terms of
Right.
the pie was rising, but there was less of us. More of us sharing that pie. So we were actually going down. So what happened was eventually we hit this point where we couldn't continue with this immigration. It was just so large and
Right.
there was some backlash. It wasn't good for the immigrants. It wasn't good for us. And the government had to do like a huge U-turn. And so they
Right.
went from saying, we're going to, let in 1 million people a year, which is how many we were letting in, to all of a sudden, no, we're going to actually not let in anymore. And in fact, some of those people we're going to send home when their visas expire. So when I thought about what I was worried about with the markets and worried about the economy rolling over, I said, everyone that's worried about the US, if you're worried about the US stock market, or sorry, the US economy, you should be doubly worried about Canada. So I was really, really bearish. And so for the past couple of years, I've been bearish Canada and I've been selling the loonie short. And then the whole world changed when you guys elected Trump. And in fact, if you think about my Canadian dollar long position, you could almost meld it in terms of how I view the entire world. So really what it comes down to is I'm a big believer in fiscal. I think that the one thing that a lot of people are missing in this environment is they're focused on monetary policy when they
Right.
should be focused on fiscal policy. And in essence, Trump has gone and told you that he wants to take the fiscal situation in the US from 7% down to 3%. And Canada, we were running a 2% deficit.
Right.
Now, all of a sudden, we have our neighbor, the most powerful nation in the world, threatening to annex us. We're sitting here going, we better do something about this. We better fix our economy.
Right.
And so we're all of a sudden going to go into a situation where we're going to go from a 2% deficit to maybe a 5%, 7%, maybe the same
Sure.
as you guys. And so the long and short of it is, I think you're going to see growth throughout the rest of the world and actually contraction in the US.
Well, let me ask you when we think about so like the fiscal thing's interesting because I think from let's call it 1982 until 2008 it was all monetary, right? Like the Fed's balance sheet was $800 billion before the GFC, so there was no excess reserves, none of this. Then they started getting this whole balance sheet expansion thing. We had a little fiscal after '01 and we had a little fiscal after the GFC. I mean, not some, but like nothing like the post-COVID, right?
Right.
And I think that, and myself included, initially was focused on the monetary policy, but then quickly realized that it was the fiscal. And in one of the things in 2022, a lot of people like to look at the rates and how fast they raise the rates. But if you look at the deceleration in the fiscal deficit from fiscal year 21 to fiscal year 22, it was about 1.5 trillion. And what happened in 22? The market got smoked, right? And so that's one of the things that's an untold story of this last post COVID, because everyone blames the Fed. So I'm totally with you that the fiscal is way more important, and the U.S. has run this Reagan's imperial circle to a T in essence.
Right.
But now we're at a changing point. Now let me ask you this though:
Yep.
these countries like Europe and China and Canada, what you spend your money on matters, and it's easier to do that strategy if you're a deficit nation than you're a surplus nation, because isn't it true that if all of a sudden you're running that and that strengthens your currency, it makes your exports less competitive?
You are correct. Okay, and a few things there. Well, going back to the fiscal, I just wanted to address one thing. You're absolutely correct. It is difficult to judge the effect that fiscal has on the economy. One of the things that happened in 2022 is that we stopped mailing people checks, and then we started doing fiscal in the form of the IRA. I say you guys should really be
Sure.
saying the
We're brother.
American.
And on
That's
this show,
right.
we're
Don't.
all
I
we're all
used to
Yeah,
family.
feel, I
and
used to
we might
feel
be
like it was all
merging,
we.
and we might be merging. We don't know. So I'm looking at the
Nadine,
chart
don't
here.
poke it. Don't
I'm
poke
kidding.
it.
No, I just see that he's announced tariffs. I don't see Canada yet, but China's at 34%, Vietnam
Vietnam's at
46%,
46.
Cambodia 49. Don't want to be
Yeah.
in Cambodia. Yeah. So, but I don't see Canada yet. So I'm curious. But
so one of the things that's the problem with fiscal is when you mail someone a check, that gets spent pretty quickly. But when you do the IRA, the Inflation Reduction Act, which is kind of the funniest, it's like jumbo shrimp. It's like it's an oxymoron. The reality is that money gets borrowed by the government and sent out to the state. But if you're, a state and they are allowing, let's say, Intel to, build a factory and then you're giving them extra money, you don't just hand them the money. There's a whole process in terms of ensuring that they're doing what they're saying they're going to do and making plans and things like that. So a lot of that stimulus from the IRA and the CHIPS Act sat at the state level and didn't start getting spent until 2023 and 2024. And that is one of the problems of fiscal, is that you can't just say when they borrow it, that's when it goes and hits the economy, because in fact, they borrow it, it causes a reduction in financial liquidity. It doesn't go out into the real economy till it is spent. And so I think what happened there was a mismatch of when it was spent, borrowed versus when it was spent, which helped create the 2022 issue. And there was also, people were scared about rates. But if we go back to 2023 and 2024, remember everyone kept saying, oh, the economy's so bad. Like, I had this chart that showed the professional forecasters 1 year probability of a recession. And I think it's the Dallas Fed, or maybe it's the St. Louis Fed. They've tracked this for literally 45 years. Like, it's been forever. They've been watching this, and it had never been higher than it was in early 2023. Everyone was convinced there was a recession coming. And then
labor was going to fall off a cliff. There's a lot of different stats, right?
Yeah.
Right.
And then it sat there for 2 years, and it just refused to go down. And the reason was there was all this fiscal in the pipeline that was coming through, and it needed to be spent. And so one of the reasons in terms of why I'm also worried in terms of the US economy and why I think it'll underperform is that I stumbled upon this great report from my buddy Vincent Deloitte at StoneX came upon it. And it's actually the US states produce like they all aggregate all the data, and they actually show their spending. So you can see the actual amount that they spent in 2023 and 2024. I think it was 15 and 16%, like year over year increase in spending. And then it showed 2025 and what their projected spending was. And on a nominal basis, it was actually going to decline, which means on a real basis, we were all going to it was going to contract. So even before Trump got in there and started talking about balancing the budget and doing all these crazy things, we were already going to have a situation where the US spending was going to come down.
And can I bring you back to Canada for a second? Because I want to bring you back before we get into the US. Is that for those people who, may or may not know, when you look at Canadian market, so financials are a big element. And I'm not talking GDP, I'm talking the stock market, right?
Yep.
Financials big, energy big, materials big, you kind of go down the list, right? So you walk into that and you say, are there opportunities now that you're saying, especially whether it's through headlines or these new tariffs or whatever's going to happen, you're like, oh, yeah, I might have closed out my currency trade. Like, are you looking at currency again? Are you looking at equities? Are you looking at credit, or are you kind of staying away from Canada? What could be or is interesting in Canada now?
I think that's a great question, and I am looking at something, and it's equities. And now you mentioned the fact that we are bank heavy in our index, so it is very difficult for me to get excited about the Canadian stock market as a whole, because although I am excited about the fiscal spending that we are going to embark on and this huge resource wave I think we're going to get, I am not as convinced that we're still not going to have a real estate problem.
Right.
So for me, I'm like, I don't want to have anything to do with the banks. Yeah. I want to buy stuff that is going to benefit from this existential crisis that we're facing, where we're all of a sudden saying, hey, we need to grow. I know in the past we've been all greed and not wanting to do pipelines and not wanting to permit mines and stuff like that. But the reality is that we are a resource-based economy, and it's time to make sure that we grow. So I have made a little basket. I haven't written this yet, but I'm going to publish this. But
this is hot off the press here. I just could see into your soul, Kevin. But no, I'm kidding.
I made this little basket of just things that are going to benefit from this sort of resource boom that I think we're going to experience in Canada. And it's not just Canada, it's throughout the rest of the whole world. I think there's going to be a resource boom. There is just everyone, almost all nations are facing the same problem that Canada's facing, and that the reliable partner that they've assumed that was going to take care of them, that was going to be the world's cop, has now turned, from the world's cop to actually at times
Adversary,
appearing,
maybe. Right.
appearing to be
the bad guy.
Yeah.
Yeah.
Okay.
It's all right. You're
Easter
Canadian.
It's all right. We're setting.
We got tough skin here.
That's all right.
We're good.
So Kevin, this Easter basket, I'm going to call it your Easter basket. Kevin's Easter basket.
Yeah. So
right. Is it concentrated in certain industries and certain geographies, or you broad brush, I don't care about currency, this, that, or that. I just care about, certain elements.
So my Canadian basket, I've actually gone and picked stocks that I like that are going to benefit from this. So you go and you buy like the cat dealership, like the thing. You go buy things like gold mines. You go buy energy. You go find all these things, because I think there's going to be a boom. Like, I mean, a boom. We have gone years and years and years of absolutely terrible returns in terms of anything commodity related. Because don't forget, let's remember, from 2000 to 2010, we had this huge resource boom in terms of China and the whole story, and the BRICS and things like that. And what happened was all these companies got too much capital, and they made mines, and we've been oversaturated with mines for a long, long, long time. So it has been, no one's made any money. We have something called the Canadian Venture Exchange, which is like this Vancouver exchange. Someone showed me a chart of the volume. We are at 25-year lows in terms of volumes. It's just been there. Nobody cares. And now all of a sudden, in the last month, everything's perked up. We are going to get a resource boom like we saw in 2000 to 2010. It might even be larger. I think that you're going to go and you have to go buy things like junior gold stocks. I think you buy copper stocks, all those sorts of things, and you just go find those things. Now, one of the things I just want to make sure people are aware of, you got to be careful of the jurisdiction. Like, just because something's listed in Canada doesn't mean that's a Canadian asset.
Sure.
So one of the things I always tell people is that even when I was bearish on the currency, I kept saying Canadian assets with long reserve lives, like a Nico Eagle, which is a gold stock that has all this Canadian gold like in here. In fact, the currency going down is going to help that stock because they're selling an asset that's priced in US dollars and all their costs are Canadian. So I am hugely bullish. I just think you can't just go out and blanket buy the Canadian stock market because there's way too much banks in there. But the Canadian resource sector, I think we're going to have a boom, the likes we haven't seen in a long time. And just, expanding that a little bit, I think you can also just buy like gold miners across the board. Like, I know it's something that everyone hates.
And Kevin, just so you know, I have been an unabashed bull of my whole career in gold. I bought a 100-ounce bar of gold for $38,000 when I was in grad school decades ago.
Good for you.
But I've always hated gold miners because there's those guys, man, they're tough. But there is a time when the gold to oil ratio, like it is now, and they can work. I agree.
Yeah.
And it feels like this is their time. And so to go with you, but it's always a bad word around me. The gold miner.
No, listen, I get it. They've been a huge destroyer of wealth. And one of the reasons I think that they're going to do better is gold is moving up so fast they can't even spend enough to make a mess of their balance sheets and do stupid stuff. And
would you go big too? I mean, I want to kind of push you on your thesis here. Would you also, like, some people listening can do and can trade in the names you're talking about, and then there are other people who might be more
namely her.
Well, anyways, more generalists or people who tend to go for bigger. Like, can you buy a BHP or Rio, or do you really need to kind of dig into? I'm not talking about Canada, just broadly. If you're talking about global resources, or do you need to kind of dig into each of the elements?
No, you can buy all those. I remember when the uranium story got going and people were telling me you can't buy Cameco. And I explained to them, no, you can buy Cameco, because the reality is when the bull market starts, if you're sitting there in your Fidelity or, Cap, you can't buy the small little crappy ones.
No.
So you go buy the big one.
Yeah.
So in a bull market, it works. The trouble is the reason people don't buy those is because there's other ones that go up 100, 200%.
Sure.
And so they just get attracted to that. But that doesn't mean the big ones aren't going to work.
Okay. I just wanted to clarify that for people, right?
So let me hear this, Kevin. So basically, let's rewind back to when you were at the RBC institutional desk in the late 90s, and the U.S. market was booming, tech boom like it is now, or like it was maybe a couple, last year, and then the dollar was super strong and the concentration was high like it is now, and then that all rolled, right? Weak dollar, weak unconcentration, and the rest of the world, emerging markets, thesis, weak dollar was a monster. Value stocks, that's where a lot of the hedge fund names that you know today, who are the masters of the universe, they made their names in that period. And I've been arguing this for a while, is that I think that we're on the verge of the next level of that, but I never knew what the growth engine would be. Because you remember, China was the growth engine behind that commodity boom, right? And this time, it's actually the multipolarity. And I think you're right. It's the world's not one unipolar world anymore. Now everybody needs to have their own infrastructure, in essence. So every country has to look internally and not to appease their McKinsey consultant, in essence. Is that kind of jive?
In essence, the reality is that in the past, the U.S. has been the world's buyer of everything. And Trump has just told you, I'm putting my hands in my pocket. I'm not buying your stuff anymore. And the world's sitting around going, oh my goodness. And they're going to have to go and do their own fiscal stimulus. And, the trouble is a lot of people get upset about fiscal stimulus. And I understand why, like just mailing someone a check is just wasted money. Like I think it's stupid, terrible, right? But going and investing in your country is a great idea. Like part of the reason you guys were the superpower of the world was because you came home from World War II, and Eisenhower was like, "What am I going to do with all these GIs?" He didn't just say, like, "Look, market, you go figure it out. I can't spend anything on the government." He said, "No, we're going to make an interstate highway system. I'm going to give them houses." You guys spent and you invested in your country. And that was part of the reason that you ended up having the prosperity that you had later, was that you invested in your country. And so too much, we've been kind of stuck in this idea that we have to cut. And like, I go look back at like Europe. And if you think about it, if you asked most people what they think the European debt, like deficit spending would be, they would assume that like those Italians, they spend tons. They must be way higher than us. Like everyone assumes, not everyone, but a lot of people assume that the Europeans are the ones with the socialism. They're the ones running the big deficits. They're the ones with the debt problem. Whereas in reality, it's actually America that's been running the huge deficits. And the European problem has been that they've been too stingent with their their actual spending.
It matters which country, right? I lived in Italy half the year for over a decade, and they don't have a great balance sheet. France doesn't have a great balance sheet. Germany has a fantastic balance sheet.
Yeah, but that's the problem, is that they've made this monetary union and without making a fiscal union. And like I am simplifying it, but if Germany were to spend like you guys do in the States, the European economy would be flying. Like it would be flying.
But again, I come back to, and I don't think you fully, like, what I have an issue with this, because the people have been talking about this since a month ago, right? People got excited about buying the euro and buying the DAX, and to be fair, I've been a Chinese stock owner for over a year, and when it was uninvestable, so I was sympathetic to it before this was popular. But if we go into this position where they strengthen their currency, they strengthen their economy, and you're Germany, you're a seller to everyone else. They don't have the domestic consumption. China doesn't have the domestic consumption sector to make up for that capacity. So
China or Germany, because you're saying two different ones.
Both.
So, but part of the reason they don't is because they're busy, not spending. I think it's a little backward looking in terms of that.
Could be cyclical, kind of saying if you get one, it might spur the other. You're saying
Yeah.
they might be more bigger spenders. They might be more importers if you have it a little more prosperity.
China's way easier to me to chat about and explain because you're right that there's all these different problems with Europe has Italy has a terrible balance sheet. France is even worse. And then Germany has this pristine balance sheet. And so there's all these problems, political issues. And so I am like concerned about how that will work out. But China to me is much easier. So let's just take China for a second. China has all the capital. Like they are
That's
a
true.
net
That is
creditor.
true.
Okay. So the reality is that everyone's like, oh, Trump's going to really stick it to China.
No.
Like, and I'm like, okay, well, okay, yeah.
They've been playing long game and more strategic than us for a while, right?
Well, I'm not going to say that, but I'm just going to say
Yeah.
that the reality is that they have the ability to bring home the money and actually spend it and invest in themselves and create the consumer at home. They do
Right.
not need to sell stuff to the US. And in fact, they already don't. Like a lot of the problems, like, you know, if you go look at it, your trade with China has been declining for the last, you know, ever since Trump came into power. And China's seen the writing on the wall. And as a percentage of their exports, you're just going lower and lower and lower. They do not need to rely on you. And not only that, in some states, in some ways, you could argue that the relationship is you need their capital more than they need to sell you their goods. And I worry about what happens if all of a sudden the world, and let's not forget, the US is the biggest net debtor nation in the world. If all of a sudden the world wakes up and goes, hey, wait, you know what? Why are we overweight US assets when we have a president that's like threatening us? And not only that, that they're trying to, you know, get, you know, doing policies that might not be the best, and their stock market's trading at an all-time high. There's all sorts of things that could come. And next thing you know, we have this exodus of the US dollar. And at first it's going to feel great. You're going to be like, great, you know what? Our dollar is too expensive. But then all of a sudden, when you have trouble, you know, the exodus to the US dollar will mean lower stock prices. It'll mean higher yields. And you'll be like, hey, wait, I don't think we really thought this through. And this is one of the things that I've been kind of pushing from the day Trump got elected. I wrote a whole bunch of pieces. I say, what he's trying to do in terms of putting mid-America back to work might be admirable, and it's a political choice that he's making. And all that I know for sure is that if he's successful in that, if he's successful putting mid-America back to work, if he's successful in getting his deficits down, the trade deficits down, and cutting back on the spending, it means a lower stock market. And that's and you know, and it's very clear. Like someone showed me this chart, and it was like I couldn't believe it. It was the change in the trade deficit versus the change in the NASDAQ over a year period. And I saw it, and I was like, that can't be, because it was just like they're coincidental, like huge. And I was like, that can't be. And I was like Ronald Reagan. I was like, trust but verify. I had to make it for myself. Like I went and got like independent data, and I was like, holy shit, he's right. Like it really is truly good. And like, so if you think about it, like let's think about a relationship that's occurred. Like you guys buy an iPhone from China, you go pay for Apple, which then buys it from Foxconn. The trouble is that you're paying dollars, and Foxconn has all of its liabilities and everything that it needs to do. It needs to pay its workers in renminbi. All else being equal, usually when you guys kept buying iPhones, the currency would rise, and then eventually would kind of work out that, you know, it would become less profitable to make them in China, and it would change the whole structure. But what's happened is China says, no, we don't want the currency to rise, because then you won't buy the iPhones from us as much and it'll be more expensive. So what they say is, okay, the People's Bank of China stands in there and says, okay, Foxconn, I know you need renminbi. I'll sell you the renminbi. I'll take your dollars and I'll keep them, and I'll recycle them in the US. So they're all of a sudden buyers of bonds, and and then because they're buyers of bonds, someone else sells them the bonds and can buy corporates and someone else. And so it makes it so your whole financial system trades at a premium. and it's on the other
A big premium. A big
Right,
premium.
It's like Canadian real estate when they came in and bought your real estate.
but
yeah, it's very similar actually.
It's the other side of the trade deficit, the fiscal deficit is a higher stock market. And so when I explain this to kind of folks, there was some smart guys that would say, Kev, I completely understand. And if you are correct, if Trump gets the trade deficit down, or if he pulls back on the fiscal deficit hard, it means a lower stock market, but he's not going to do it. So that was when I talked to really smart people, that was the consensus. And so what happened over the last month?
Do you think that people now think that, oh, he won't keep doing it because the stock market will be too devastated? I mean, we don't seem to think that. I just see that Mexico and Canada are excluded, right? So I guess we're friends again. So we can really talk.
We're friends.
We're friends. We can
It's
have a
great.
beer. We can play hockey. All's good here today. But when you kind of look at what's transpired over the last month and what's going on right now and what you think is going to happen in the future, right? Because today is just today. As we know, tomorrow is going to be intraday, at the beginning of the day, end of the day, totally different story of what's going on. Like, you take this and, I read your piece. You kind of need to put a pin in it, but then say, let's look at the data. Let's look at really the real potential playbook of what's going on. How are you thinking about playing this globally going forward then, right? Because let's get out of our I guess 1 p.m. news flow and get into really how do you make some money here? What are you looking for?
Okay, so I think that it's very difficult to try to trade the headlines. And people mistakenly start saying,
we did it at the beginning of the day, middle of the day, end of the day, new headlines.
Today was the worst headline day of all time.
I've never seen a headline TikTok, day. Right? It's crazy.
I checked out on trading today. I literally told Nadine that we're not doing anything. We've done really well. Like the headline trade, totally agree.
Yeah. So to me, I say stop looking at the headlines. Realize that he is purposefully creating chaos. And step back and go, okay, big picture, what does this mean? Big picture, I think he's doing tariffs. I don't know. We're taping this as he's doing them. I still think he needs to do it as from a revenue basis. I still think he wants to raise money. He believes in tariffs. Just go look at his 1987, full page ad that he bought in the New York Times and read it. You'll see that he has loved tariffs for a long, long time. He thinks the world's ripping ripping the U.S. off. He believes that a trade deficit is a subsidy. So I don't think that's going back. So then just kind of say, okay, I think that trade deficits are going up, and you can make your kind of call about what that means for the economy and then the stock market. I happen to believe that it's bad for the stock market and it's going to cause it eventually to go down. Whether the trigger is going to be this thing, I don't think so. I think it's going to actually be when the real economy goes over. But I do want to say something else, that I think that the real problem is that it's kind of a culture issue and it's a culture clash. And I think that I'm going to choose my words carefully here.
Go for it. You don't have to with us.
I think that behavior that to many Americans seems acceptable is not viewed the same throughout the world.
Right.
And so I know that when in the depths of him, when he was very much attacking us, and we do view it as an attack.
Right.
And all you have to do is go look at the UN Charter and read the rules and realize that once you start threatening another nation or threatening a NATO nation, like I always tell people, I go, imagine Justin Trudeau had done the following. He had gone and declared the UMCA void, put in tariffs on the U.S., done a salute at a place, endorsed the German far right party, and then also threatened to take over Greenland. And imagine,
and then did a bunch of stink bombs.
Imagine you guys would have rolled the tanks in to replace him, and you rightfully should have. So one of the things I think that a lot of people in America might underappreciate is how stressful and upsetting this is for the rest of the world. because you guys
Their
are such a
behavior's
large.
not going to change. Like there's a
Yeah.
lot of autarky now, right?
Yeah.
And a lot of also at the consumer level where like, do they really want to then go visit the US after this? It doesn't change overnight, right? Where you go, I didn't want to before and now I do because there's no tariffs. It's kind of like damage is done and there's a different psyche, right? You
Right.
see it in
I think
China
I
and
think
now
that
you probably
point
see it
about the
everywhere.
damage is done is
Yeah.
the really important part. I don't think many Americans appreciate the damage that he has done to to the partners in the world, and how it will be very difficult for relationships to return. Like, even if he said just kidding tomorrow and
Doesn't
just
matter.
took
Yeah,
off,
yeah. I'd say,
like, we would
yeah.
be like, well, how do we know you're not going to do this to us again
Right,
in
right. It's a
a
bad
year?
relationship, right?
Yeah.
We've been dating. It's going been pretty well. Okay, yeah, there was a little instability, but now they went on a bender. Coming back, I'm not going to go drinking again. And
Yeah.
you're like, wait a minute, I've seen it. I don't trust it.
Yeah.
Don't
Well,
want it, right? Don't want it. Yeah.
we were basically sleeping and then woke up
Yeah.
and got punched in the face. That's
Right,
how I
right.
would view
Yeah.
this.
Yeah.
And so my point is that I think that there's some long-term changes that are going to occur in the world that are going to take a long time to play out. And I suspect that people don't realize that long-term money moves way slower than they ever think it moves.
Yeah.
And I would say that, like, I used to work at a bank and I would trade with these guys. And I can tell you that I remember them going into meetings. They'd be like, well, we're thinking about upping our equity exposure. We're thinking about lowering it. They weren't looking at the headlines. These were long-term
Big
decisions. Yeah,
decisions.
they took a long
Yeah.
time. And then they would come to me and they go, okay, we're going to buy, we're upping our exposure. We've just moved it from 60 to 65. And then I would spend a month buying stock for this guy.
Sure.
Like, it would be that kind of stuff. So what I think's happened here is that there's some damage done that it will be very difficult to ever go back. Like, not ever, but it's done. Like, the damage is done. And like, if you're sitting there in Europe, European pension plan, and you're overweight U.S. assets,
Right.
how
Doesn't
can
look
you
good.
how can you
Doesn't look good.
stay?
Yeah, you can't.
Yeah.
So, but let me push back just a little bit, because you know what? The pool of assets in the globe is not very good. And so when you talk, let's just put back to what fiscal. Okay, so running the Reagan's imperial circle strategy, bonds went from 1% to 2% to 5%. And it would have gone higher if Yellen and Powell didn't take the foot off the gas and start doing a variety of things when we got to the September of 23 and you had a massive bear steepener going on. It could have gone higher, okay, but it didn't. And so what happened when Germany decided, oh, we're going to do 500 billion? And I was about to short that, and I was thinking about that for 2 weeks, and I'm still mad about it. But like that, it was a 30-year move in the sell-off in the bond. So this is what I worry about. I worry about that these bond markets don't have the capacity. And our friend David Dredge, he talks about the Hunger Games. Who's going to buy the bonds? And so, the U.S. bond market is everyone likes to talk about the military, but really the bond market of the U.S. is the heart of the empire, right?
Okay.
And so these new markets, I just think that you think like it's going to be easy for these assets to come home.
You're in District 1. Okay.
Ben, thanks for making my point that Americans they only look at themselves and can't imagine the money ever going anywhere else.
No, you're wrong, because that's been, just so you know,
I'm
Nadine.
just kidding. I'm just giving you a hard time. So
we're
first of all,
joking.
One of the things, so let's talk about, I think you started with the stock market and you're like, why would you go anywhere else? Because
the bond market. I'm mostly interested in the bond market, the big boy market.
Let's just start though with the stocks. One of the things that people will say is, well, why would you buy the European stock market? The reality is they don't make any money. And I go back to the idea that the government's deficit is the private sector's credit. People hate that, but it's
surplus.
Yeah, it's an accounting identity. And so if the governments in Europe, the governments in Canada, the governments in China start spending more, there's going to be more for the private sector. There's going to be more profits. And that's part of the reason that the U.S. is being such a great performing stock market, is because you've run such large deficits.
Without question.
So now let's go to the bond market. The bond markets, I think that to some extent, the idea that yes, the U.S. bond market is very much the biggest, most liquid, greatest asset in the world. There's no doubt about it. There's absolutely no doubt about it. Having said that, let's think about what your president has been doing lately. He's been like undermining that asset. He said, like the other day with Musk, he said something like, "Oh, you know what? There's not as much debt as we thought there was." And I was on a panel in New York, and I was lucky enough to be sitting beside John Hilsenrath, the original Fed whisperer, and he said, "I think there's going to be a point where Trump threatens to not pay the interest on the bonds
Oh
for
my
foreign
gosh.
holders."
That'll be
Right.
I mean,
and everyone went
Yeah.
berserk. And I was like, yep, I actually think that is a very potentially, like, not that he's going to do it. He's just going to float it. He's going to be like,
oh, he's going to get one of those Trump,
yeah. What if we didn't
I
do
could
it?
see that.
Right.
I could see that.
Okay.
This is like his
So-
third term comments, that kind of stuff.
I just think that this idea that, everyone has to buy US because it's like we have no choice. I think that's
let me just clarify,
Okay.
because I think I misconstrued. What I'm trying to say is I very well understood this Reagan's imperial circle concept, and our friend David Dredge talks about this with who's going to own the bonds. So the stock market, and I love that you say credit, because I always say public deficits, private surplus, because it's all circular, right? It's all an accounting identity.
Yeah.
And the fiscal deficit is to plug the trade deficit. It's all related.
Yeah.
But we sacrificed our bond market to bring back the economy for COVID. We sacrificed our bond market to get to the S&P 6200.
Okay,
Nothing
agreed.
is free in the world.
Okay,
So what I'm
agreed.
trying to say is that, yes, I think equities in Germany and these places can work, because first of all, no one's owned those things forever.
Yeah.
And sure, they got a little bump here recently, but just doesn't take that much money in those markets, just like junior uranium miners, right? It doesn't take much to get those things going.
Yeah.
And so I totally agree, but I'm talking about the bond market. Like, do you really want to own German bonds? Do you really want to own the sterling, the gilts? Do you want to own the oats? Do you want to own Chinese
Well, I think
bonds?
if the currency is going up, I think it becomes a lot easier to own those. Part of the reason that nobody wanted to own the other stuff in the past was the currency was going down. Like, so you had negative rates, you had all this crap, like there was no reason to own it. And then let's think about what's going to happen as well from a perspective. I suspect we're going to get more and more countries having legislating like their own content. Like, I think that what's going to happen here, let's just use Canada as an example. We're going to need to go build pipelines to get our oil from our landlocked, problem, and having to sell it to you guys at a $20 discount. We're going to get it to our coast so we can go sell it in the world market, right? We're going to have to spend a lot. And the reality is we're going to need some capital. And one of the problems is all of our capital is sitting in the US because that's been the best performing market out there by far. And so you go look at the Canadian pension plan. We actually put aside money for our pension plan. And I can't remember what the number is, but I think it's probably going to be like 70% in the US. The government's going to say, hey, wait, well, this is kind of dumb. Why are we invested in US stuff when we need to do stuff at home? So I think you're going to start to see more and more governments actually legislating that there's going to be content rules in terms of how much foreign assets they need to own.
That'd
And
be
so-
interesting.
Can I go there? So
Sure.
so let's think about that. So there's then a shift of liquidity, right? Shift of assets, if you want to call it. That can be huge.
Yeah.
Obviously. You even saw that a little bit when nobody wanted to go in China, and all of a sudden China's doing well, then all the money goes there, right?
Yep.
Money flows where returns are, especially when they've been washed out. And so when you think about that dynamic, in addition to the fact that the US has been, until year to date 2025, the outperformer.
Yeah.
What is most offsides currently, other than call it shorting US, but what's most offsides in positioning that you would say is an opportunistic trade?
Well, the biggest macro trade out there is the fact that everyone is super, super long US assets.
Sure.
It is the most crowded, overweight trade there is. I had a guest on the other day, Julian Brigden, and he had this great point. We were talking about how crowded this was. And he explained to me, he says, yeah, and if you think about it from a European pension plan perspective, you can go out and buy Mag 7 and make it a bigger weight, because what you knew or you used to know, in a risk off moment, what would happen would be the stocks would go down, but the currency would actually rise. The US dollar would rise. So it was a little bit of a risk parity event there. Like,
Okay.
you know how you used to be able to go buy, stocks and bonds because they were negatively correlated.
Sure.
You knew you could use some leverage, because the reality was that if we got into a real problem with the stock market, your bonds would do better. And so therefore you could use more leverage. That negative correlation really helped. So all of a sudden that's part of the reason that all these pension plans could be overweight US assets, was because in a risk off event, we had the dollar going up. But now, what if we have the opposite? What if the behavior of Trump and the policies that he's doing is actually causing them to both go down? And I saw a really interesting study the other day that for the first time, stocks and the US dollar both went down for the most days out of the year. I can't remember what it was, but that correlation has changed. And so to me, one of the things that you should be watching for is kind of the moment where you see stocks going down, US stocks, going down, US bonds going down, and the US dollar going down. And there have been days like that. Like, don't think that there's not days like that. And that's foreigners leaving the US market.
And so let's say, would you short the dollar now? I mean, if you're looking at
that's
that,
one of my
one of your positions is short the dollar.
Yeah.
But would you then go like long EM local currency bonds? Are you going long other stuff, or are you more like, no, my trade is to short the U.S. currency, short U.S. stocks? Like, is that the trade, right? Are there secondary trades you're doing on top of that, or what do you think?
So I think the US dollar, I think that was the top, with that kind of peak exceptionalism in, let's say, the end of 2024 or early 2025. I wrote a piece saying, like, this is it. This is your time to short the dollar. I think that this is the long-term trend, that we're going to be a lot lower.
Yeah, I've been writing on since last spring, but I just said not yet. Yeah. I was waiting for it. I'm like, I'm not ready yet, right? Yeah. And it worked, because like through the election, it was like, okay, you didn't want to be short yet, but it's probably time now.
Yeah. And so one of the other things I believe is that you go listen to Trump and like go read his Business Week article interview from the summer. He specifically talks about how the yen's too expensive, the renminbi's too expensive. He is going to eventually go after the dollar and get it lower. And it is going to
be. That's his strategy, 100%.
And so one of the other trades, like, I own Nikkei, like I like Japanese stocks, but on a just pure, like, I just trade currencies as well. Okay. I will just own levered, currency futures on the yen. And so I like the yen the best. Europe, I think, is a little ahead of itself, but here's another thing to think about that I think is even more interesting. In 2022, when they started raising rates, everyone thought that the rates were going to raise, go up 200 basis points, the economy would roll over. And then it ended up being that they had to raise them 500 basis points. And it was a fixed income volatility was sustained and much larger than anyone ever imagined, right? The move, which is kind of like the VIX for the bond market, exploded higher and then kept going and stayed there for a long time. I think that we're right now at just the first inning of a huge move in FX volatility. Okay. So one of the things
we completely agree with you here. Like,
so
without question.
I always tell people, any currency position I have, I don't own it outright. In futures, I own 1 year. Like, I own 1 year call.
Do you trade like butterflies and stuff like that?
I will just. I do some of those kind of things, but on the whole, I just think that ever since Trump, I've been telling people he's going to make things volatile. This is the greatest environment ever to own long dated options to express views. Like, I really, truly believe that.
How long? Last year? How far out, Kevin?
So one of the things that Dean and I, I've had the privilege of talking to a lot of people when I do my podcast, and sometimes someone asks me, like, what's the one thing you learned that was like surprising to you? And I was an index equity derivatives trader, and usually index volatility in terms of this on the stock market trades above realized volatility.
Right.
So on the whole, we're usually short vol, and then we worked for a bank, so we had bank balance sheet. So I spent my whole life trading volatility from the short side, and I hate. I'm not very good.
You don't
I'm
strike
not.
me as a short vol guy.
Oh,
No,
I
no,
like I am,
no. It
especially when I got a
pains.
bank
Yeah.
behind me. But anyways,
Yeah.
so and I've gotten now. Listen, I've gotten smarter about this because the reality is that when I started talking to some guys, I would meet these people. Like Jim Leitner was one of the ones with the light bulb went off, and Jim Leitner is this market wizards
I know
type
he
guy.
is. He's a
Yeah,
smart guy.
yeah. And I realized that they use options to create leverage in their portfolios a lot. But one of the things they don't do, they're not buying 1 month, 3 month
Right.
options. They're buying 1 year, 2 year options. And so one of the things that I do, I realize is they'll buy 1 year or 2 year option and then roll it when it's like 6 months or roll it when
Right.
it's 9 months. And so they keep that out there and it enables them to not, get that theta monster that's out there. So when you're asking me what term or,
Yes.
they're
Yes.
all 1 year plus. And that's how I do it. And I don't let, and the other thing is I will not let it go to like, I don't, just because I buy a year, I don't let it go to expiry.
Right.
I
Right. You
roll
just
it
roll
as
it.
6 months and then I
Okay.
buy another 1 year. And
Okay.
so I'm trying to maintain the payoff profiles that are like of a 1 year option.
Okay. No,
Yeah,
so
and
you don't know this, but my view is we've been long yen, concerned about U.S. equities, long gold. I was long European defense companies before. No one would listen to me last summer about it. So we have a
that's
lot of
true.
similar
That's
views, a lot
true.
of similar
That went on deaf
views.
ears. That went on deaf
Yeah,
ears.
not deaf ears. I was like an idiot, just like, what are you talking about, right? We don't want to talk about those names, like so boring. Let's talk about Nvidia, right? What's going on with Nvidia? What's going on with Nvidia? But you look year to date, man.
Yeah.
European defense
Yeah.
stocks, where it at? Japanese
Yeah.
defense stocks, right?
I
Yeah.
mean,
But not to take
yeah.
the lap, but like those are the kinds of trades that we want to talk about, right?
Yeah.
And so, and understanding how you are thinking about them, so that you're thinking about the trade plus an increase in vol, right? So that you're getting this exponential benefit, and willing to take that kind of position on is helpful for people to know, to get
Yeah.
into your mind, right? Because
Right.
you're kind of doing two trades in one.
Yeah. And so let's talk a little bit about China because I love China. And one of the problems is that my buddy Shrub, he came up with the thing, he calls it fog, fear of
Yeah.
getting Gazpromed, meaning
Okay.
like you'll wake up and all of a sudden you're like, and so I think even there, it even makes more sense to own long dated options,
Okay.
right? Because if you go out and you pay full price or you lever up even a position, and then all of a sudden we get a situation where there is some sort of issue and the ADRs that you bought are all of a sudden zeroed, like what happened to the Russian assets. You want to own the premium like that, you'll just lose your premium. And one of the interesting things was I was watching this interview by the woman that runs the Soros Foundation now, and she was talking about their long China position, and she says she has them all on as call spreads.
Wow.
And I was like, I wonder if that's why she's also doing the same. Like she's
Yeah.
expressing it all through call spreads.
Yeah.
And I thought to myself, I bet you anything that's what she's also looking at. Like, I don't think there's going to be a war. I don't think you're going to get Gazprom, but
Yeah.
but the reality is, and then not only that, I'm also bullish in terms of volatility. So why wouldn't I do this via options as opposed to, owning this thing outright?
Joan exchanges?
So wait, let's talk about China for a second because I'm looking at my Bloomberg board and and by the way, just so everyone knows, our friend Rupert, who's been on the show twice, the blind squirrel,
Yep.
him and I have a bet on the USD CNH, and
do you?
Yes, we do. I have it will hit 8, and he has 625 or 650, something like that. I can't remember the exact.
So
Over
you're
a case
bidding,
of
are you
wine.
bidding CNH or CNY? H?
CNH, the
Okay.
offshore.
And so why do
And
you think it's going to 8?
skyrocketing right now. I just want to let you know it's literally up 8 points in the aftermarket, dollar strengthening against the CNH right now on this Asia move. So Rupert, and I'm sure you'll watch it, but like here's my point. We had my ex-father-in-law who was been doing business in China since the 70s on a podcast here. When was that, Nadine? Like November or something?
Yeah,
And his view, this is a guy who was a sourcing guy. So he's been doing business in China since the 70s when there was no white guys there.
Yeah.
And like actually he caught the whole trade, right? Of cheap labor, the rise. And his view is that they'll subsidize the exporters and they'll devalue the currency. That is what he thinks they'll do.
So first of all, I'm impressed that you have your ex-father-in-law on your podcast.
I'm that kind of mature person. I'm a mature human being.
So I understand that argument. I believe that they're trying to transform their economy more and that they're not going to rely on the dollar. And I think longer term, Rupert's going to be right. Whether we have a spike of worry and that causes it to go to 8, maybe. But if I had to choose a side to bet, and it's not just because
Rupert,
I'm going with Rupert, and
all right,
not just because he's a nice guy.
Guys, I get it. I get
exactly.
it. You guys stick with your Commonwealth, buddy.
Because like the reality is that this currency is cheap.
Yeah.
Like it's really cheap. And the one thing is like when I have a lot of American friends, they go out throughout the world and they tell me, oh man, it's so cheap and blah, blah, blah. Oh man, it's so cheap and blah, blah, blah. And I'm like, do you not see the common denominator here? The rest of the world isn't so cheap. It's you guys are overpriced.
Overpriced,
And you know what? Actually, I can attest to that. In 2011, if you remember back then, to go back to Australia with Rupert, the Australian dollar was extremely expensive. And I had been in Japan that year, and it was four of the most expensive cities in the world were in Australia and in Japan. The yen was down in the 80s, and the Aussie dollar was in 105, 110 land. And I was like, look, it's time to short the yen and go long Japanese stocks and buy US stocks. And I think maybe that's, to Nadine's point, she likes the yen, we own the yen, we own some Japanese stocks as well, but I'm more inclined to be on the yen, is that it's the opposite now, right? Like, it's like, hey, the dollar and back in 2011, no one wanted dollars, no one wanted US stocks. It was the pariah of the international, and now it's like this hallowed, so it just is these cycles, right? Like,
I took my kids, you know what? The yen is so cheap.
Yeah, everybody went to Japan. Everybody went to Japan.
It's even cheap for Canadians.
Yes.
I got a quick story to tell you.
Oh
I took my family there, and so at the time I had like a 18 or 17-year-old son was our youngest. So I have a couple girls that are older, and then this 17-year-old son that we bring. And we get off the plane and we get somewhere in this like Tokyo, and I'm like, let's just go eat. So we get at this restaurant, and they bring us into this little room, and we're all sitting there, and I'm like, I'm still not used to things. We're just pointing and stuff. And my son orders like the Wagyu steak. And I'm like, come on, really?
Yeah.
And then I'm like, oh geez. And then I'm getting the bill and I look at the bill and I go, oh my God, it's $2,100. And I'm like, Jesus, why did you get the Wagyu steak? That's ridiculous. Like blah, blah, blah. People warned me about this. And then I realized I'd gotten the zero wrong.
Okay.
And it was $210. And we had eaten for 5 of us, like, kings and queens.
Right.
It was so cheap. I spent the whole time going, holy smokes, I can't believe how cheap this currency is. Everything was dirt cheap. And then it's only gotten cheaper since then. And that's for me as a Canadian, and my currency is cheap. I can't imagine for you guys.
Right. I think everybody I know has been to Japan. So I need to book that trip ahead. There needs to be a business just to book trips like 5 years in advance places, right? Book it in, lock in that sushi, lock in the Wagyu beef prices. Like the whole vacation lock in.
We could create that business. That would be like a great business.
I think so. I'm already locking in my summer to Europe because I think you gotta get the dollar. While the dollar's hot, you gotta be locking this stuff in when you got
for sure.
More people to pay for, right?
And I think to Ben's point though about the long-term cycles, like I think that we step back and ask yourself, what are the chances that the US dollar is going to stay strong and may get stronger? Pretty low to me.
Pretty low, yeah.
Like that's the right play. Yeah. And so not only that, Nadine sounds like she's got a hot hand. We should be asking her what she's buying.
I don't talk too much about it, so that's my problem. I don't really talk much about it, but
she likes to keep it a little bit close. But I think look, let's just go back to Trump for a second. Is like I had a very
Kevin. Oh boy, I'm already getting ready for you.
I'll bring this into the market. I'm saying I had a very different view of Trump, and I talked to our buddy Larry McDonald and many people who I thought Trump was going to go for the bond market and anti-stock market. And I think everybody thought he was going to do Trump 1.0, which was stock market, stock market, stock market. So far, oil prices are down, and the bond market's been
spot on.
And he was willing to sacrifice the stock market.
Yep.
And they were like, hey, we're either going to do status quo and eventually it's just going to go the way of the British Empire or Roman Empire or whatever, or we're going to try something. And it may not work. It might not work. This might backfire and it might be crazy. But they have a plan. And like that was what I think market.
Do
yes, clearly. They clearly want to get rates down. They want to get the mortgage rates down. They want to get the housing market down. They want to deregulate the banks.
Plan is different from desires. I think they have desires, but a plan
no, they have a plan,
is different.
and whether it works or not, no, they clearly have a plan. I disagree with you. Why do you look at what they're doing? They're like tear up it doesn't mean you have to like it. I'm just saying they have a plan.
Well, I think it's very
it could be a bad plan.
No, I don't think it's a plan. I think it's objectives, but then emotions get thrown in and then lobbying. I mean, I just think that different people are lobbying different ways. And so where we end up is unknown at this time. But I think that they have objectives that you're talking about. And I would agree that those are objectives. But the plan aspect, I'm a little bit less confident in. How's that?
I think Scott's got a plan.
Yeah.
That he tries to convince Trump. Yeah, that he tries to convince. That he tries to convince Trump to do.
Yeah. Yes. It may or may not happen.
Right.
Yes, I think Scott's very smart, and I think he has a plan. In this, in whether it works or not is a different thing. And I actually listened to you, Kevin, talk about one thing on I don't know which podcast it was when I was preparing for this, but like the confidence to lend, right? Where did Keynes come up with the concept of we have to use fiscal spending? It's because at times of stress, the uncertainty is so high that the government will just be able to be the player to get the confidence back. And so their plan, Scott Bessent plan, Trump plan, whoever you want to credit the plan for, that is the one risk. If you try to sacrifice the economy, right, and the stock market, there is a chance that the confidence won't be there.
No, you're absolutely correct, and
that's our cat moment, by the way. I got it. I nailed it. I went long cat. I went long cat. I didn't even know you had a cat. I went long cat, and I it was like a 0-day option, and I won.
It's dinner time for her, and that's why she's coming to see me. And I'm all alone this week, so she's bugging me. Yeah. So. Listen, I think you're spot on correct that they looked at it and they said, we have nothing but bad choices here. Yes. If we continue down this road, we're going to eventually be the fall of the empire because we're spending too much. And they've decided that they're going to make the bond market the most important part. And I wrote a piece about this, and I'm not sure though that they're using the correct analogy. Like, I think that they look at it and they look at the Bob Rubin, who was the Treasury Secretary under Clinton, who famously with James Carville said, oh, if I ever want to come back, people want to come back as, all these wonderful things. I want to come back as the bond market because I can bully anyone. And the reality was that Bob Rubin, who was the Treasury Secretary and he was a Goldman Sachs alumni, he convinced Clinton to cut back on spending so that you could lower rates. And then he actually created the boom of the late 90s with this policy. It was called Rubinomics. And I was thinking about it, how much Bessent is echoing a lot of the same things that Rubin said. Like Bessent will say, we're going to get rates down and then people will be able to borrow and be able to spend, and we'll let them decide. And we'll have this great, wonderful economy that is driven by the private sector as opposed to the government sector. And I think that's ultimately what he's hoping for. But when you look at what was the market in the Clinton era, when Bob Rubin suggested this, I pulled it up. Inflation was almost the same. We were both running around 3%, like back in 98 and today. Okay. But the 2 and 10 year under Clinton was 7% or something. Right. It was like some just obscene amount. Right. And the term premium for the 10-year term premium was almost 300 basis points. It was like 275. So there was a lot of oomph to when they cut back on spending to create the kind of confidence in the bond market and get rates down. And I looked at today and I'm like, okay, so you're telling me that there's all this worry about the bond market. I see the term premium, the 10-year term premium at under 50 basis points. I see the bond market. Every time there's a slight hiccup in the economy, everyone rushes into it. I don't see this kind of problem with funding. And I think it's hilarious that people are trying to talk about a problem in like that the bond market is going to be the epicenter of this disaster. And I go, we are so far away from that still. And I'm not saying it won't happen. I'm not saying the curve won't steepen. I'm not saying that we won't get term premiums blowing out. But to think that we're anywhere close to that, and that therefore you need to pull back on spending because this is the disaster we're walking into, I think is way, way ahead of it. And I think the reality is that even if he got rates down to 3%, it means the economy is in the tank, and that the reason rates are 3% is because there's no growth, and when people are scared again about the reality of that we're going into a disinflation/deflation.
Which is
So
unknown, right? Because all the
yeah,
you can see all the CapEx spend, personal spend. People don't want to spend when they don't know what game they're playing, right? Like if I'm playing soccer or
100%.
football. So you see that with the corporate buybacks too. Like that is also another pressure that just got talked about today that I've been talking about for a while, is that companies want to hoard cash when there's unknown.
Well, what about this latest thing? I saw Scott Bessent. He went and said that he was going to hold back the money that was promised under the IRA and the CHIPS Act,
Right,
unless people spent more.
More. Yeah, the more.
And
I
I'm
wrote
like,
about that.
okay,
Yeah.
so like
Yeah.
you're sitting there as a company and you're going, okay, they promised me this, I committed to this, and now
Yeah,
I'm like
like,
getting held
it's
up as like
right now it's like doubly expensive. I got to go to my board. But like they're
yeah,
thinking
but like
practicality, right?
no, but like but again, you can't count on them keeping their word,
Right.
and ultimately
Yes.
that's
Yeah.
bad for like you guys
Everything,
have
yeah.
been the greatest economy out there, and being like the such an example that everyone else wanted to emulate, and it's shocking to me how quickly you've just thrown it all away.
But I would say this: the one good thing about America
Yeah.
is we get a new election, and
Yep.
we only have 2 terms.
Damage is done a little
It's not
bit,
like
yeah.
Xi Jinping
No,
or
no.
Putin who are in
So
power
Ben,
for.
so this is where my point about how you guys see the world and how the world sees you is so important. And
More than half the people voted for him, and they're going to say they could vote
I'm
someone
just
else
saying
again.
there is
Yeah.
no.
We had George Bush. We
No,
got
no,
over that.
no,
He was the worst.
No, it's
but
different. This is
this is
different.
different. George Bush might have done some stuff that people didn't like. He wasn't unilaterally, um, you know, canceling deals that you guys had signed. He wasn't threatening other countries that were part of NATO, the part of the UN. And so I completely agree that your attitude of like, oh, it's okay, we'll get to midterms, it'll be fine, they'll get reined in, everything will be good. I really think that is where the disconnect is that you guys just don't appreciate the damage that has been done in terms of how the world sees you, and that no matter like you guys could tell us tomorrow that there's going to be no tariffs and that the USMC is good, and we would still go about rearranging our economy.
Right, because they can't trust voters
They
are going to
did.
vote this
They
in
did.
again. They can't trust that voters are going to vote this in again, or that leadership's going to do it. They're just
100%.
That's the issue. Is like it doesn't mean that next election that can't have like a friendly person, but it'll take generations to change it, right? Because it's going to take someone, younger people who are looking at TikTok, if that still exists, and not looking at remembering what it was like as a company owner to make decisions, right? It's just it's going to take a while.
And I think I know, Ben, I could see it in your eyes, so you don't believe me. Not that you don't believe me. It's not that you don't believe me, but you think that we're going to be like, oh, it's okay. You know what? They're going to forget in 6 months' time. And listen, it could be that you're right. That 6 months' time, it goes back to normal, and we're too quick to forget. I don't think it is going to be that way. Like I really, honestly think that, like this is how bad it is. We are booing Wayne Gretzky. Like that's like when Canadians are mad at Wayne Gretzky.
Canadians are booing Wayne Gretzky.
Yeah.
Oh yeah.
Yeah.
What?
Yeah.
Yeah. Are you booing Celine Dion yet, or what?
Someone smeared poo on his statue in Edmonton. That's how mad we are. And the reason was because we had a game with you guys on the hockey, and he came out and he's, listen, first of all, he's a big MAGA guy. You know, he hangs out with Trump. He's very much MAGA. And what was really insulting to us was he gave a thumbs up to your bench and then didn't do anything for us. And we were just like, you know, like whatever. And so, but my point is,
that's a bad look.
When Canadians are, you know, abandoning like the
Wayne
person
Gretzky.
that is so integral to us because we feel so strongly about this, it shows you the level of emotion that is there. And
I
I
think we're naive because we just think, well, we don't think about other people that often, so they're probably not thinking about us. But the thing is, they do. They are.
But I just want to like give a little bit of credibility to myself. I've lived in Europe in 3 different cities in Europe for over a decade. I married into a Chinese family. I love Canadians. I've been all over the world. I understand what you're saying. But all I'm trying to say is that the Chinese and the CCP don't change. Like this is like, yes, I remember Bush. I hated Bush, and I remember feeling so bad during that period of Bush and Cheney. And I think, I'm not going to make Nadine say anything, but I think that was a universal feeling of a lot of Americans at that time, and the rest of the world didn't like it. But we got over it, is all I'm saying.
Yeah,
Like,
listen. I'm not disagreeing with you, and I all I'm saying is that this damage is just in another level, and it's you. And Bush, you might not have liked his policies, and yes, he did do, like, if you're in Afghanistan or some other countries, you might really hate him. But the reality was he wasn't threatening allies. There was no animosity with the allies. Like we never got up and was like, you know, Canadians, like we lean left. So it's not like we like Bush either. Having said that, I was thinking the other day was like, oh my gosh, you know what? I kind of, wouldn't it be nice to have Bush? And you know,
that's when you know it's bad. That's the sign you know it's bad. And I agree, because Bush was classy. You know, you might not like Bush,
he didn't
but he was a
threaten us. He
classy individual.
He didn't threaten us and tell us that we were going to be the 51st state. Anyway, so my point is,
I'm join California. If you're gonna join as a state, you know, you guys at least choose the right state.
You know, listen,
I'm kidding you.
Yeah.
I'm kidding you.
Anyway, so I just think you need to be careful assuming that the world could go back and that it will be forgotten, because I think that that is a huge and like, I know people are gonna, like, although you're Californians, you guys probably have a left-leaning audience, and like, I'm not trying to say this in an antagonistic way at all.
No,
I'm trying to say,
be data-driven. How do you pay them? How do you make money?
I want to figure out, listen, at the end of the day, we can sit here and argue about what should be done, but the reality is that what will be done and what it means for markets is really
100%.
what we're focused on. So, you know, if I thought that Trump was going to cause the stock market to go up, I would be bullish and I would go own this. And in fact, you know, like, I recently wrote that piece on Canada, and I'll be honest, I don't like Pierre Poilievre. He's like, I view him as our Trump. And I think even under him, we're going to do better, and that we're going to actually have the stock market go up. So I'm not letting my, you know, politics get in the way of my trading. And the perfect example of this is that this recently, I got bearish and I was writing these pieces, and I felt like, I mentioned that thing in New York City. I laughed and I said, when I suggested that the US dollar could go down and the stock markets could go down, I felt like I was going to get booed off the stage, because I was there early January at the height of the Trump boom, when everyone was just so bullish. And one of the things that I think, if you go and think about it, you have guys like Bill Ackman talking about this is the most bullish and environment that I've ever experienced. We had Stanley Druckenmiller talking about how this is the most business friendly administration in decades. And then we had another strategist that's very famous, and he's going out there and he's saying, I've never been as bullish as I am in this career. So all these guys are letting their politics, because they are, sympathetic to that, get in the way of their trading. Now, Steve Cohen, the guy is a friggin' shark. And I just love the guy, because do I think he votes right? Yes. I think he's as right wing as those guys that he just mentioned, but he's smart enough to say, listen, austerity means slower stock prices. And why would I sit here and argue with that about that? And he does not let his politics get in the way of a position.
Yeah, you're a fiduciary first, right?
And so ultimately, when I'm saying these things about trying to make Americans understand how the rest of the world's seen them, I'm saying it because I think it's an opportunity because I think they're all going out and assuming that it's status quo and that this is going to be all like we're going to return to the old environment, and we're
No,
not.
no,
We're
I
not.
100% agree
Yeah.
with you. And I've been of the view, I'm the weird guy who actually wanted this because I could see what was going to happen. So I thought it was going to take a good time to be long bonds and short stocks, which is the opposite of what's worked in essence. And so like that's my view. I'm just trying to play devil's advocate that like it doesn't have to be forever. That's all my point
Yeah.
was.
And listen, it won't be forever. And then, like, do I think that I think we've hit the worst of our relationship between the U.S. and Canada. I
I hope
suspect
so. I hope so. I hope that's
he
right.
hasn't said he hasn't threatened the 51st state in like 2 weeks. We have a new prime minister. I think he's figured out something else to go. He's busy bugging
Vance is
Greenland.
going to Rome, right? Vance is going to Rome,
So the reality is,
yeah.
do I think it's going to get better? Yes. Do I think Canadians that are saying they're not going to go to Florida right now are eventually, some of them are going to end up going to Florida? Yes, I do think that. But if you go look at the year over year airline bookings, it's down 70% to the US.
I saw that in your note. That is wild.
Yeah.
So let me bow tie this of like Trump and all this stuff of 2025. You had a comment that I really liked, which was 2025 is making macro great again.
Yep.
And I made some hats that I gave to Rupert and I gave to David Dredge. I sent one to Nadine, although I don't ever see her wear it. Red hats that said "Make volatility great again," which is in essence is the same thing, right?
100%. Yeah.
It's just volatility because in 2010 to 18 there was no vol, and now we're back, right?
Yeah. The moment he won, that was my first piece I wrote. I said, listen, this is about to get wild. This is a super important period. He believes in changing the economic world order. We've had this world order that's been very, very stable for a long time, and he's changing it. And this is going to be, like I said at the time, this was going to be like the 80s when guys like Steinhardt and Soros made their fortunes. And I still think that. And in fact, I think it's more important than ever to pay attention to macro. In the old days, it didn't matter. Currencies were relatively stable. The reality is everyone's rates were low. We're going to start to see some wild stuff. We're going to start to see, like bond markets go no bid. And to your, like, I don't want to say that I'm not worried about the bond market because I am actually a huge long-term bond bear. I think that we are going to have tons of inflation and that ultimately rates should be a lot higher. I'm just like, and I think what you're going to start to see is we're going to start to see things like U.S. rates blow out. So 10s in the U.S. are 6.5, and then Germans are go bid, and there's 400 basis points of carry and things, crazy stuff where you can make fortunes, like just doing all sorts of trades between currencies and between countries. And it'll never be more important to pay attention to the macro than these coming years.
So can I ask you one final question, Kevin, other than how people can find you? Is that on a personal level, you obviously were on top of your trading, and then you've got a newsletter, you're a successful podcaster. What are and not just like topics, but what are the elements that you're doing when people are trying to look at, hey, maybe they're good at something, maybe it's trading, maybe it's not trading, but they're good at something and they want to emulate someone like you who is transformed a little bit, maybe exponentially of what to the impact that you're having. Do you have any lessons learned or any kind of nuggets that you can share about that for people?
Well, so a couple of things. First of all, I think that in terms of for like the average Joe,
yes,
this is the greatest environment ever for learning about the stock market.
Right.
And a lot of people say to me, oh, you're so lucky you worked on the institutional desk. You have all these advantages and stuff like that. And even when you talk to people, they all assume that the institutional guys and gals are they
few of
they
us,
have
yes, the few of us,
they're at an advantage because they know so much more. And I go, are you kidding me? Like they would die to be able to trade smaller. They would die to not have the constraints of having to worry about whether they're underperforming their peers by X basis points this month, right? You as a retail investor,
do whatever you want.
Yeah. You can sit there and go, listen, there's a lot of risk in the market right now. I can sit this out. Or you can look at the equity risk premium and say, okay, the equity risk premium says, although I don't know what the stock market returns were going to be for the next year, I know for over the next 10 years it's going to be lower. So I
Right.
can afford to sell it and actually be in cash. And even though even though like a professional can't, I can sit through that pain. I can be, as a retail investor, I can go and buy equal weight when the market cap weight is exploding higher, and I can sit through that. And you can go and do trades that are actually make a lot of sense, and you just need to be disciplined. Then in terms of the actual information exchange, we have Substacks, we have
Right.
Twitter, we have
Everything,
podcasts.
Yeah.
Like, I'm shocked at the number of people that are just like truly just legends that get on the podcasts and
Right.
share their information and stuff
Right.
like that. So my point is that this is a great time to be interested in the market and to learn a lot. And there's never been more ability. It's never been flatter.
Then why do you do it if there's so many people who are doing it and explaining things? Like, and you're obviously successful at it. What are you doing differently that makes people want to listen or read what you're doing?
Well, not everyone likes me. Like,
Everyone.
so no,
Everyone always. I'm just
so
gonna
in terms
use
of me,
extreme.
what I like to do, I just like you guys, I'm willing to take like a view that's different.
Okay.
And so one of the things that I think is
Like
interesting
long cats. I went long cats at the beginning, and it was not something
It's a great
discussed,
call.
right? It was a call.
And one of the interesting things about writing a letter or just exposing your view, like if you think about it, if I write a letter and everyone tells me, like I say, I'm long this, I have a view about
Right.
this, and everyone agrees with me,
Yeah. No one
it's
wants to buy
actually,
it. Yeah.
well, it's not actually a great trade. Like Jim
Right.
Grant always jokes, he says, a successful investment is having everyone agree with you later.
Right.
And the
Right.
reality
When you're getting
is,
out. Right.
yeah.
Before you get out.
Yeah.
Right.
And,
Yeah.
and here's a little inside baseball for everyone's listening. I can tell you that many newsletter writers that are true traders, not just guys that are writing letters, but the true traders, when we have an idea that we feel is well thought out and we present it and everyone tells us it's stupid.
Right. You're
we
right.
double-
You're excited.
Yes. We
Yeah,
double
I'm more
the
excited.
position.
Yeah.
Yeah.
You're like, this is great.
And I know that, like, and in fact, when everyone tells us it's a great position, we're actually more worried about it. Like,
Yeah,
and
that's why when I started seeing everyone talking about defense stocks in Europe, I was like, all right, time to trim. Time to trim or get out, right?
Right. Like, and that's the trades later.
Yeah, and that's a good point, Kevin. Is because when I was young, I really liked to argue, and I think that's why I gravitated towards markets. It's like having a thesis, and it's like Chinese stocks in January 24, energy in 2020. If everyone disagrees with you, that's usually the sign there might be something there, right? Isn't that kind of it?
Yeah, the hardest trades are the best trades. I can tell you when I've written ones that I'm scared to hit send because I'm like, oh God, this is a real like outside the box view. And you know what? People are going to crap all over me, but I really feel strongly about it. And then when I'm sitting there scared to hit send, those are the ones that are often the best trades and the best pieces. And people look back on it and like tell you that. Like here, I wrote an op-ed for Bloomberg, and it was in January 2022. And I remember writing it, and it was at that time the bond market had been down for 1 year, and I suggested it was going to be down 2 years in a row. And you should have seen the big wigs that sent
Pushback.
me. Yeah, that said, well, like, listen, it's one thing when some guy in his basement, some kid in his basement tells you you're an idiot. It's another thing when like the head of long bonds for XYZ pension fund tells you you're an idiot. And like that's where it was.
And in our business, they can pull your money, right? Like it's like it has real world consequences. It's not just a newsletter. When you're running money and they just don't agree with you, it can change your business.
Well, and to be fair, I remember I saw Jeremy Grantham, the GMO. He says that when he looks at his returns over the years, like imagine he has like a 2-sharp or something, and he's outperformed by X number of basis points over 20, 30 year period. When he looks at it in dollar terms, meaning like how much dollars he's taken out of the market, it's not as good, and it's actually bad because what happens is the clients take away all your money at the worst possible time. So when he's sitting there in 2000, buying value stocks, and he's managing the least amount of money that he's ever managed because everyone's busy chasing all the .com stocks. And then when everyone's giving you money, it's like that's the point
Yeah,
where
that time where you'd be like, yeah, maybe I
Yeah.
should.
like when they're going, they're giving you money because Nadine's so smart and she's bought the defense, European defense stocks.
We were done with that. Yeah.
Yeah.
Now
Anyway,
I'm
so
going long
for-
cats.
and so
now I'm
for
going
those-
long cats. I think
Yeah.
we should go. I think we should have like a dollar down strategy,
Yeah.
right? Like
But
that's what we should.
the dollar down, the ultimate would be just that one little thing. You know, there's 65% of the global debt. There's $325 trillion of debt. 65% of it's US dollar denominated, right? So that's 210 plus the euro dollar. That is like $10 trillion of just interest demand for dollars a year. And then let's say 4 or 5 years is the average life. So that's about 50 trillion annually of demand, which is half of the global GDP. That is the one trick of the weak dollar thing, is we have so much leverage and so much of it is dollar based. That is not to do with anybody's view or do I like Trump or whatever. It's just it's mechanical in essence.
Yeah, but there's also a huge overweight in stocks.
No, the stock
Yeah,
thing, I'm totally
yeah,
with you.
yeah,
I think
and
on
I-
the
and
stock
I-
thing, I'm
yeah.
100% with you.
And I feel like even in the US, even bonds, I feel like there's overweights in the US.
Sure.
And like sitting there, like imagine like gold. I've loved it for a long time. And I basically got really bullish after Russia, got zero.
Yeah.
And I was like, this is like, and I kept telling people, they would send me these things about, oh, it's got to go down because the US dollar is going up. It's got to go down because real rates are rising. And I'd be like, stop it. Stop looking at those things. Like, like Michael Jordan, that video from the 80s, like, stop it, get some help about drugs.
Yeah.
I felt like that's why I had to tell everyone, stop looking at that. Because the reality is that the People's Bank of China is sitting there with like X trillion dollars and they have a tiny sliver of gold and they just saw the Russian central bank get zeroed. They're got to buy gold. And like, I still think that's just started and it's going to continue. And so to your point, I think that there's the bids for like dollars from that will all of a sudden change. And I don't, and
it's a slow process though, right? I think
it's like,
and Kevin, I call it, it's like the pancake ratio, the pancake to gold ratio. People look at something before and it was working, but now it's like, it doesn't matter, right? Like it's, like stop looking at that. Like it's not about the pancake to gold ratio. Like, it's about something totally different that you're missing, right? Understand it.
Be careful about this slow process though. Like Hemingway's told us about that. Right? Like
suddenly and then gradually.
Yeah. So that's what I worry about.
Yeah.
Gradually and suddenly.
So
but I will say that I wrote a piece about this last summer about how if you looked at the vault holdings versus the GLD or versus gold, and then you saw that real rates, it all changed in 22. That was the good insight. That was the time where the relationships that had driven gold, and like gold's a weird thing, hard to trade. Like there's a lot of different, but like that was when it has changed. And like it's now very clear that the Indians have all the gold and everyone else is trying to get the gold. Like,
I think the Chinese have it as well.
Yeah.
But
Indian households have more than all the central banks.
That's true.
Yeah.
Okay, now I'll leave you with one last thing that you just highlighted there. Sometimes the best signals aren't like when something breaks out or something. It's when something stops working.
Right.
And so you mentioned that you said like if you were sitting there and you looked at this and you said, okay, like because people used to run these dual regression analysis like on gold and against interest rates and the US dollar, and it stopped working. You could sit there and go, listen, this has got to revert. This has got to revert. Right. Or you could go and say, hey, something's changed.
Right.
And I'll just leave you this last thought. Bruce Kovner once said, like, what I really look for is a market that is not confirming consensus. Right?
That's a good quote. That's a good quote.
Everyone thinks that this is something that should be happening and it's not. Those are the ones you got to do.
Yeah, we're going to leave on that brilliant summary of the pancake to gold point.
Okay.
Brilliant summary. So Kevin, we could spend more hours with you chatting macro markets. I know that. So we want to thank you for sharing your wisdom. If our listeners want to connect with you, read your writing, listen to you, how do they do that?
So thank you very much for having me on. It's been a real pleasure. They can go to themacrotourist.com or you can send me an email, Kevin at themacrotourist.com, and I'll send you some samples and stuff.
Awesome. Thank you so much, Kevin.
Thanks,
Thank you again
guys.
for
Thanks,
joining us. And
buddy. We
hopefully we can
appreciate it.
check back in the future with you because this has
Oh,
been
for
a
sure.
very engaging conversation.
For sure. And I'm going to leave you with what all of the Canadians are saying. And you'll have to be left with figuring it out. Elbows up.
Okay.